Hello, good afternoon. You're watching Closing Trades on ET now, and for a surprise, we're above the mark of 25,000 yet again. In fact, very close to the highest point. When we started off the day, it didn't look like we're gonna be close to that mark of 25,000, at least with the kind of dip that we saw. But no, we are powering ahead, and in fact, Nifty Bank is up at the level of 51,300, so doing quite well. In fact, within the various sectors and segments, it's media as a pack which is doing quite well. So Z Entertainment is up 5%, Hathway, Nazara, Saregama, PVR Inox, all of these stocks are up anywhere between 2 to 5%. The other big gainer today is the IT pack. So Coforge is leading from the front today. That 5% uptick after Motilal Oswal upgraded the stock to a buy. The target price stands at 8,100 rupees. So that stock is in focus. Pharma is doing quite well. So Granules, Divi's, Loris, these are your big gainers in the trading session. That US Biosecure Act has provided that much needed boost for the pharma sector. So we are seeing some amount of traction within those spaces. And on the losing side, not many to be honest, just a few NBFCs are actually under pressure. So Shriram Finance, Bajaj Twins, the entire insurance pack of course is reeling under pressure. No breather coming in at all for them, which was expected as far as the GST meeting goes. So the HDFC Livestock, SBI Life, they're all coming under pressure. But just before I toss to Aisha, a couple of these gainers suddenly. Century Textiles, that news flow that has come in with respect to the new property signing and the new development happening there has suddenly taken the stock to a new high. Prison Johnson is doing quite well in the trading session, and Sumitomo Chemicals too is on a high 11% up move for Sumitomo right now.
Yeah, but it's really about pharma today. Be it a Divi's, be it Piramal Pharma, after the draft of that much anticipated act was passed by the US House of Representatives, clearing its way now to head to the US Senate now for a final vote. And largely what the Biosecure Act actually does is it aims to prohibit US drug makers from engaging in business with 5 Chinese companies, and this is coming after a gap of about almost 8 years. Some are looking at it as just a pre-election rhetoric, but let's see how it transpires. But other than that, we should just bring up the stock prices and show you where they are currently. Because be it a Divi's, Piramal Pharma, they're all holding up very smartly in trade. There's of course Coforge as well. There you go, Divi's standing with that 4% gain intact. Syngene up by about almost 3%. And then Piramal Pharma is the other one which is going to come for you on your screens. Coforge, after that Motilal Oswal upgrade, the target price has now been upped all the way to 8,100 from the current 6,100. So that's of course acting as a trigger. And the agreement with HDFC Ergo General Insurance is auguring well for Zaggle. That is another stock which is in focus. But not bad at trading day, like Anisha described it earlier, 150 points and still counting upwards. Kunal, hi. What is it that you're making of the Nifty construct?
Yeah, I think it's a good start of the week for the indices because over the last 1 or 2 days we've seen good recovery, especially given the handover from the previous week where the indices closed at the lowest point sub the 25,000 mark. Now, interestingly, yesterday we saw the Bank Nifty moving up higher and led the charge from the front. Today, even though the Bank Nifty is a bit muted in terms of the relative performance, but still there is a follow-through price action for many banking names, and even the Bank Nifty is up some 200 points. Which means that there could be a chance that the Bank Nifty may continue to show signs of strength as well as signs of outperformance. What we've also seen is the help of the 3 key indices, FMCG, Pharma as well as IT. All 3 of them have done exceptionally well over the last few weeks and months, and they continue to be stronger points for the market. So what we are looking out for is that the 3 sectors which are doing pretty well gets added up by one more sector, which is potentially Bank Nifty. If that happens, then we could be looking at further higher levels for the indices.
Okay, point taken. Just some more details as far as CTL or Century Textiles is concerned. Ownership of 10 acres of land parcel in prime area of Worli. I wonder which area this is exactly because these are the rights that they have taken over from Mr. Nusli Wadia. So that's the kind of land parcel that they've taken. The amount paid for the transaction is 1,100 crores, but the approximate booking value potential of this property could be around 14,000 odd crores. So that is something which has taken that stock higher. Naresh, if I can get your views on Century Textile and G Entertainment.
So Century Textiles has been in a strong uptrend for the last almost 1.5 years. For the near term, it has been pausing around that 2,450, 2,500 mark. So sustaining 2,500 would be a fresh breakout, could take it towards 2,800. So looks like a further momentum breakout in the making. Z, on the other hand, has been a total disappointment over the last many years, but the stock is back to the same prices where it was in the COVID lows almost. So the COVID lows for the stock were around 120 to 130. The stock has made a bottom around that area. So it's a risk reward trade here. Have a positive bias on this one. Till it holds above 130, there could be a bounce back to 160, 170 levels.
Right, okay. Just looking at some of the other bazaars in trade, look at Tata Power that surged up about 6%. We were just talking about that upgrade coming in on Coforge. That stock higher by nearly 5.5% right now. Indian Hotels as well. It's once again, it's attempting to clock that 700 mark. 4.5% higher for that one. So all these stocks are looking very smart. What's not looking good? Some of those insurance plays and some of the financials, which were the movers from last week, they are the ones which are coming off. So Canfin Homes, SBI Life, ICICI GI, HDFC Life, these are all the rank underperformers in today's trading session. Other than that, also pressure for a Bajaj Finserv, Bajaj Finance, Shriram. These are all stocks which are currently at bay. But Kunal, what about IT? That seems to be definitely gathering more strength.
Yeah, and it's good to see now that the mid-cap IT stocks have started to fire up, because many of the mid-cap IT stocks, they were lagging a bit behind. So we had the likes of Infosys, HCL Tech, which were leading the price performance from the large cap front. Then you saw TCS moving up higher, trying to play a catch up with the large cap names. But now you have the mid-cap IT stocks, the likes of L&T, Infotech, Mindtree, Coforge, which has done exceptionally well since the stock had broken past about the 5,500 mark to now 6,500, 6,700 plus levels. L&T, Infotech, Mindtree Technology Services, these stocks were reeling below their long-term averages for quite some time, or at least in the month of till June, July. And from there on, what we've seen now is that these stocks are almost 10% higher than their long-term moving averages. So they've covered up quite a long distance from their big underperforming territories. And I think that's a comfortable sign which the markets are getting into. So which means that we could be looking at a further continuation rally for many of these IT names. It's difficult to pick, pinpoint just one or two stocks because of the way these stocks move up in a cluster. But then I think Coforge, L&T, Infotech, Mindtree from the mid-cap IT names still look attractive from current levels.
Okay, point taken. But since we're talking about IT, hear out what Apurva Prasad had to say from HDFC Securities, as well as we had Vibhor Singhal today from Nuvama to talk to us about that.
The growth and earnings cut which was taking place in the sector, that has bottomed out. So I think that's very evident. The fact that the transition from a protracted IT spend, low discretionary, onto normalization into the second half is the other thing which we have cited. And thirdly, the relative under ownership in the sector always provided a tactical opportunity. That's the combination of these three has led to 30-35% PE re-rating that we have seen in anticipation of some positive markers. Deal cycles, for example, in some pockets seem to be improving. So I would say that is a positive. Some of the vertical segments within BFSI seem to be, the commentary seem to be slightly better than that. So I think there are some signals that the normalization that was anticipated, we are headed towards that. Mid-tier space, persistent systems, while multiples can remain elevated, but we sort of confident on the growth leadership that the company has demonstrated. So that would be has been a topic for quite some time. Within the larger ones, like I was saying earlier, LTI, Mindtree, TCS, and Infosys, that's where there is relative comfort on valuations historically.
The stance on the IT sector has been positive for the past 2 years. We've maintained that the demand environment remains quite strong, which is visible in the deal flow that we've seen over the past 2 years, despite the macro headwinds which the sector had witnessed. What was missing in the sector was the deal flow to revenue conversion, which of course had multiple points, two of them majorly being the new deals being awarded were delayed in execution, and the older deals which were there in the pipeline of the companies, the discretionary part of that was being put on hold. This was both these things were an outcome of the overall uncertainty in the macro environment in US. So from a near to medium term perspective, we believe that as we move closer to the interest rate cut scenario in US, this uncertainty is going to get removed. For a medium to long term, we've done a very extensive analysis of how the Gen AI opportunity is going to play out for the Indian IT sector. And we believe it's going to be a mammoth opportunity for all the players in the domain. We've compared it to multiple technology disruptions which have happened before in the past. Every time there is a new technology, industry experts have called out the doomsday for the Indian IT and have written the obituary for how the for the Indian IT companies. But every time there's a new technology disruption, the Indian IT companies come out stronger from it with net incremental growth from using that opportunity itself.
Also, let's hear out a management interaction, and my colleague Anurag Shah caught up with Umesh Revankar of Shriram Finance on their festive promotions, listing plans for insurance companies. Let's hear out a slice of that exclusive chat.
We have very strong presence in the rural market, especially UP, MP, Bihar, where our presence are one of the highest, and that's where we are getting traction from.
Okay, so this festive season also you're targeting around 15-20 or more growth in that?
That's what I was trying to tell, that last year also we had a festive. This is also festive. So festive to festive, we will have to 15-20% growth will be there. But month on month, it will be bigger growth.
Okay.
But year on year, it will be same, normal growth.
Okay. Sir, just want to understand that your insurance subsidiaries, life and general both, they are doing good. So what are the plans going ahead? Are you planning to list these companies to value unlock?
Yeah, definitely. Listing is one of the option, or is the option we have. And we have one investor already in Shriram General Insurance. And Shriram Life also, we may get one investor. So definitely we need to give listing so that the investor also is very comfortable.
Okay.
So this is something which we have in plan. But maybe it is 2 years down the line, the listing we may think of, not immediately. When I say 2 years, the planning will happen within a year, then it will go on for another year. So it will take...
Means you mean to say that within 2 years the listing will happen and first will be of general insurance followed by?
Followed by Shriram Life.
Okay.
And both are doing well. So if you look at Shriram Life, the growth has been, last year it grew nearly 38%. The APE growth has been 38%, one of the highest in the industry. So as long as you grow more than the industry, definitely you will do much better.
And for life, you just said that you're looking for the investor. How much stake you want to give in life also?
It will be almost similar, 5 to 10%. We have 10% investor in Shriram General. Here also it will be anywhere between 5 to 10%.
So that's the latest coming in from Shriram Finance and what they're doing there, because they have signed Rahul Dravid as a new face of the organization as well. But in the meantime, what's actually on the back foot is this entire NBFC space. Naresh, any reason why there should be a bit of a weakness here in some of these names? And if yes, as in, should one use this dip as a buying opportunity?
So overall, names which had rallied a bit have taken a pause, but the structure is positive. We are seeing the smaller names also trying to make a comeback. So whether it is Aditya Birla Capital or L&T Finance, the housing finance companies like PNB Housing has already done well. Names like Shriram Capital, which had already moved up quite a bit, those are the ones taking a pause. So overall, the structure is positive for the NBFC pack. It still remains a buy and dip.
On that note, let's take a very quick break. Still sticking by with the gains. Let's see how the last lap pans out.
Welcome back. Well, in terms of the market mood right now, it continues to be fairly buoyant. Yes, we're off the highest point of the trading session. So maybe some of the large caps have come off. We should perhaps pull up some of the banking names and see what the mood is there, because the banking index too seems to have come off a bit from the highest point there. For now, SBI is a bit of a drag because that one is down 0.5%. And then, of course, HDFC Life has deepened its card. Ditto can be said for SBI Life, Bajaj, Twin, Shriram Finance. They are further coming under quite a bit of pressure right now. From the broader markets, Prism Johnson, Sumitomo Chemicals, Aether Industries, All Cargo Logistics, these are the big names that we are watching out for. Naresh, your take on a couple of these big movers, Sumitomo Chemicals, for instance, Prism Johnson, All Cargo Logistics, if you're tracking any of these names?
So Sumitomo is interesting. We've seen the whole agrochemical space do really well over the last couple of months. Sumitomo has finally broken out above the 2022 highs. A good breakout out here above the 550, 560 mark. Could head up towards 700 eventually. So any drift down dip would be a buying opportunity. Then all cargo is a single day move, so I would wait it out. Same is the case with Prism Johnson. The stock was sideways for the last almost 6-8 months. Today, the stock has seen a very large price volume run. Would wait for a dip out here, but Sumitomo looks the most interesting.
Those are some interesting stocks right now in trade. Other than that, let's just take stock of some of the newsmakers as well. And what is it that's been holding out? We've been talking about as to how, Tata Power is definitely one of the biggest movers today. The company has commenced production of solar cell, which is at India's largest, single location. It's in Tamil Nadu, so that is one stock which has definitely been a buzzer. We've been talking about the pharma names after the Biosecure Act, so not just Divi's, Piramal Pharma, Syngene, Laurus Labs, all of them are holding a buzz. And then, of course, Zaggle also, like we pointed out, the company has entered into an agreement with HDFC Ergo General Insurance, and that is one stock which has also been holding out quite smartly. Infosys and Proximus Group, they've strengthened their strategic collaboration. They're going to be unlocking some new business opportunities. That stock is well looking good. Although you're seeing a bit of a cool off come in, not just for IT, but even for the Nifty right now. Let's just bring up the Nifty graph because there's a sudden dip that one has seen from the highs of the day. That, of course, is the Nifty in trade, now latching on to a 0.5% gain, still holding on to 25,000. But Kutal, do you think 25,000 will stick by for the index, or does it still seem like a little bit of a slippery wicket?
No, I think it's a decent support. The index has managed to cross back about the 25,000 mark today after staying for, I think, 2 or 3 trading sessions below those level, which means that, we've managed to come back from a zone of a bit of, skepticism for the indices, which was trading below the 25,000 mark, towards a zone where there is slight bit of confidence, which has brewed back again into the indices. Now, the good part about the indexes, that we've seen support from the erstwhile performing sectors, the likes of FMCG, Pharma, IT, etc., as well as new sectors like Bank Nifty, banking indices making a comeback of sorts, so seeing a follow-through price up move over the last 2 days. So I think on the back of this, I would expect the index to sustain this 25,000 mark and potentially build up higher from current levels.
Okay, so 25,000 is expected to sustain. That's the latest coming in. Time for a quick break. We'll see you right back with more updates on the market.
Back with closing trades right here in ET now, easing off a little bit from the top of the day, but still holding on to that 25,000 mark, or maybe not actually. We're coming off quite fast, 25,022 now on the index as we speak right now. Devin Choksi too joins in on the show. Devin, hi, afternoon. What's the strategy for investors looking at both medium as well as the long haul?
Good afternoon, Aisha. Obviously, I think this market is offering plenty of opportunities during the correction. And I firmly believe that I think given the kind of correction that one is experiencing in individual stocks, vis-a-vis across the market corrections, I would think that I think it becomes an opportunity to buy into some of the qualified names, good names. Largely because of the fact that I think on one side, you have a situation wherein plenty of new IPOs are coming into the market. And as a result of which, the traders, they keep on shuffling their portfolio stocks from one to another, also to go for the IPO subscriptions. In such situation, when they exit some of the quality names, which becomes attractive enough to buy into the portfolio under the corrected price, it becomes an opportunity to invest for the long-term investors. And that's what I think we would like to take the opportunity as, because we firmly believe that some of the larger companies which are available at compelling valuations today, they become an opportunity for tomorrow for the portfolio investors. And that's where I think your eyes and focus should be in investing into the market.
Okay, that's a take coming in. We'll watch out for this in the market as well. But for the time being, Prism Johnson continues to do quite well. Actually, 19% surge on that one. Sumitomo Chemicals up 11%. Wanted your take regarding the autos as well, Devin, because we have seen a slew of these discounts and price cuts being announced. Yesterday, it was the ICE vehicles wherein Tata Motors announced, discounts up to 2 lakh rupees. Today on EVs as well and hot selling cars like Nexon, etc. as well, they've announced discounts at as much as 3 lakh rupees. Does this go ahead and tell you that there is some problem and either inventory, either plateau in demand, but there is definitely something amiss in the retail demand of autos?
Yeah, Nisha, good. Good afternoon. Well, I believe that I think it's a reality that on one side, the inventory in the backyards definitely requires to be cleared. And that's what most of the OEMs are doing currently. Ahead of festive season, probably I think there is a requirement to clear this particular inventory. And that's where these discounts are coming in. I do agree that I think with these discounts, at least I think some amount of challenge would be there in the near-term earnings of the company. But having said that, I would think that the long-term prospects of the business in the activity of the company like Tata Motors, they are not getting affected. On one side, they have got a proper portfolio balance, which consists of the commercial vehicle segment on one side, the passenger vehicle segment on the other side, EV segment as a subsidiary. All of these, I think, are a right mix as far as the product portfolio composition goes. So, in a given situation, when they are desperate to clear their inventory, it should be seen as an attempt to, I think, not run into any kind of a negative books. And that's where probably I would think that market is probably responding and the stock price is down. If a correction is of a sizable nature in the stock price, probably I think that can be a buy opportunity because long-term prospects in the business they remain intact, and we believe that the commercial vehicle is a segment which one should be owning eventually.
Okay, since we're talking about autos, here are the conversations my colleague Sumit had at the event in Delhi.
We expect that I think H2 and maybe starting from September, which is the beginning of the festive season, the demand should start picking up again. And we will be in a good position with growth YOY in H2, which should lead to the final year at around flat with respect to the last year.
So talking about now, going forward, what is the outlook overall? New launches you're bringing, what category of tonnage you will be getting the new vehicles in?
I think we continue to launch products and variants across the range, and generally in a year we launch more than 150 variants. So I think we will keep the same trajectory in terms of number of launches this year also. But within that, I think we have now also been introducing electric vehicles, and we have also been introducing alternate fuel vehicles, that is CNG and LNG. So I think we have been introducing spate of technologies across, and we'll continue to launch quite a few products.
And talking about the prices, so on as far as vehicles are concerned, are you feeling any price pressure of inputs? If yes, what is the outlook for prices as far as commercial vehicles are concerned?
So I think the pricing for commercial vehicles in this year has remained stable. There is also good pricing discipline in the market. As far as input pressure is concerned, I think there are some commodities which are inching up, some commodities which are correcting. So on a net basis for commercial vehicles, I think one is seeing a flat kind of commodity outlook.
Well, that's the word coming in from Tata Motors. In the meantime, let's just also take a look at how these auto stocks have actually performed. M&M continues to be, a bit of a struggle. 2,700 is where that stock is. Naresh, just want to, get you in on the charts of both Tata Motors as well as M&M, because the cool off from the year high for M&M has been quite significant.
These names have seen a 8-10% correction from the top and a consolidation. And mind you, over the last 1 year, say roughly around last year, the stock was closer to 1,600, went to 3,000, and now is at 2,700, 2,800. So looks like a consolidation, a time-wise correction on Mahindra and Mahindra. Same is the case with Tata Motors. The stock had gone up almost more than 100% over the last 1 year and is now taking a pause. A couple of spikes around to 1120, 1150 did not sustain. So I would expect it to stay sideways for maybe another 1 to 3 months. So a consolidation across the whole auto space, if you see.
That's the latest in some of these auto companies. In the meantime, the SIP data also came out, and the SIP flows continues to be strong at 23,547. It's an uptick versus what we saw last month, even though on a month-on-month basis, there has been a reduction in the net inflow as far as the overall equity inflow is concerned, but at least the SIP flow continues to be quite strong. Devin, what do you make of this? And the other big news and the important news was that there's money flowing into large caps now.
Yes, absolutely. I think in the large cap, there is a value proposition. On one side, most of these companies are decently valued. Thankfully to the active derivative market, the which is basically making the price realization, I think, much simpler, or the value realization much simpler by giving the correct market price practice. On the other side, I think you are seeing these companies not so expensively traded, and at the same time, fund managers finding more comfort in buying the neglected valuations in the some of the large cap companies, be it part of Nifty 50 or Nifty 100 for that matter. I believe that I think that's reality. The retail investor is putting in money into the mutual fund. It's continuous process. Today, I think 19.5 crore accounts, unique client code accounts, are already there registered in the exchange, which to my mind, I think is only a beginning. It could be 3 times more than what we have seen up till now. Largely because of the fact that I think with the size of the economy growing, higher amount of saving and investment is becoming the reality. And today, if $400 billion are getting deployed into the financial assets, be it equity, direct equity, mutual fund, insurance, or provident fund, etc. I think 10 years from now, I think you're likely to see 4x kind of a growth, 4 times kind of a growth in these financial assets, I think, which are coming in thankfully to the larger amount of GDP and the contribution of financial assets into it. So yes, I think we are likely to see larger amount of inflow into mutual fund in a successive period as well. So we remain distinctly positive about the liquidity-driven push that the market is getting and will continue to get eventually.
From Mahindra Manulife's Anthony Heredia is also that, he's saying that it wouldn't be surprising if SIP inflows surpass the 30,000 crore rupee mark by the end of the financial year.
I think my prognosis for SIPs longer term continues to be positive. My view is SIP numbers will grow at 1.5 times the growth of the overall industry in equity and hybrid. So I wouldn't be surprised if we start to see 30,000 crores per month by the time this financial year is over, because there's a very strong appetite from retail investors towards this product. And secondly, I think given where market valuations are, a lot of people are looking at SIP as a more sensible route of investing in any case.
Okay, point taken. So that's about the SIP flows. But Devin, what's the view on power sector? Today, Tata Power is active 7% higher. SJVN is up 5%. Suzlon Energy is doing quite well in the trading session, 5% higher. Take a look at CESC. That stock has been, up 5% as well. A lot of these power names have come back, especially today. Would you be buying afresh in some of these names?
So maybe I think individual news flows in respective companies, be it for Suzlon, which has won, I think, one of the largest orders up till now for execution purpose. So visibility on the execution side is much better. And so is the pricing format, I think, which is much, much stable now for all the renewable segment of industry in the power. As far as the conventional, the thermal energy business is concerned, I guess I think the larger amount of benefit is because of the cheaper input cost, which is now basically becoming a reality. On one side, the crude oil prices are down and suggesting the trend will continue to remain down. On the other side, I think all other alternative fuels, which are basically were till now priced higher, their prices also have started coming down. So certainly on the demand side of the scenario for electricity, which continues to remain robust and going forward as well. So you are likely to see the better margin format, I think, for most of the companies hereafter. One should remain positive, though I think that somewhere down the line, the commodity play will be evened out. But at the same time, I think the higher demand for the energy is definitely going to be the reality for even not 1 or 2 years, but I think next 5 to 25 years. So certainly we remain distinctly positive in this territory, and selective businesses within the entire ecosystem, they remain favorite picks, I think, as far as the investment activity goes, be it in the finance space for the power generation activity or for that matter transmission activity, or be it in the space where engineering companies are involved. I think we look at several companies within this value chain for putting our money into this investment, because the upbeat scenario remains intact as far as the power business is concerned.
Okay, point taken. But since we are talking about the power sector, hear out what Mr. Girish Tanti, the Vice Chairman at Suzlon Energy, had to say. And then we'll also play the soundbite of a very important conversation, Mr. N. Chandra talking about the prospects for Tata Power.
On an average, I think as we have kind of been on the historical reasons, both on the revenue side as well as margin side, we will remain broadly in line with our past performance. So we are seeing a good flow of orders from the industrial groups. And I think with the PSU coming in this way, now we have one more leg of growth from the size and scale on that ground. So I think from the demand point of view, I think it's a very robust demand that we are seeing in the industry.
The sustainability is a big theme world over. And it is a reality that the world has to change. We cannot be emitting Sarge Carbon.
CO2 is public enemy number one.
Number one. And that I had the conviction. Second thing for me is if we have to do anything in India, electric vehicles should get the priority because we have the maximum number of polluted cities in the world. 14 out of 20 are in India. So if we have to really solve this problem, in all our companies we have to pivot. So I had this belief not only in Tata, but it was in Tata Power. Same time we pivoted to electric vehicles here, we also took a decision in Tata Power that we will not put Capex in coal. All our Capex will go in renewables.
Right.
I still have the conviction that electric vehicles is the way to go. It is the destination.
To be at the cutting edge of technology, especially in this space. I mean, India, honestly, is still quite far behind.
We will get there.
How long do you think it will take to
I
get?
don't want to put a timeline, but we're getting there. Every single investment that we make gets us closer.
So we are catching up.
And we'll catch up.
Mr. Chandrasekharan, I want to talk on...
But you should never assume that any country is going to be completely self-sufficient and in 100% in everything.
Right.
No, you will always work with different sources, but you need to create enough redundancy so that the resiliency is not impacted.
Okay, EV is the way to go and the vision is pretty much out there. Tata Com holding up 4.25%, Tata Power higher by about 6%, there's TCS up a good 1.5%. Actually, most of the Tata Group stocks are doing pretty well. Tata Motors also will just come up for you on your screens. That perhaps is the only laggard, down about 0.6% as we speak right now. What's the Bank Nifty up to? That continues to lag. Naresh, just wanted your sense on the Nifty Bank and whether you see any meaningful comeback or a move.
So in terms of the index, we've seen good follow-up in the last two sessions. And now what we need is a clear cross above 51,750, 51,800 on Bank Nifty spot levels. If that happens, that gives a clear signal of reversal and we may even go back to the previous highs. But as of now, it's too early to call given that every time it has taken a move, we faltered. We have yet not seen the heavyweights like HDFC Bank or a Kotak Bank do well. You have strength in ICICI Bank and the smaller names as such. So waiting out, but overall, the banks have consolidated long enough. At some point of time, there could be a recovery in a major way. So for now, watching out for price action to confirm 50,500 on the downside, 51,800 on the upside would be the deciders going forward.
That's the latest coming in on some of these counters and what you should watch out for. But in the meantime, just taking stock of what else is happening in the markets right now. On the gaining side, there is a bit of a move on the likes of First Source, Himadri Speciality, TVS Supply Chain. Piramal Pharma, of course, is reacting to that news of the Biosecure Act as well. Deveen, what's your take on pharma and how big a potential could this be? Because, of course, while it sounds positive, it's the first step towards getting that, act cleared. But then there are those rhetorics as well that maybe this is just related to the election and the political rhetoric, and maybe 1 year out, things will be back to normal. What's your take on what kind of export potential does the India pharma business have?
So let us look at it from two angles. On one side, the input cost is softening as far as I think the intake is concerned for pharma companies. So that is where probably I think they are likely to get benefited in subsequent quarters. But keep that aside for a while. I think look at the companies which are either in the business of providing the specialty generics, the complex generics as we call them as, or the companies which are in the business of API and CDMO. I guess I think these companies are relatively better placed in the universe at this point of time. And depending on the product to product category, I think that I think some of the top tier companies like the Sun, Cipla, Lupin, Dr. Reddy, I think they relatively look more stable at this point of time compared to their peers, I think in the mid tiers. So because of, I think, their ability to supply to the complex generics products, and at the same time, some of them, I think, the API category like the DVs and the LORs. I believe that I think these are some of the companies where probably you are likely to see relatively better growth than what you have seen in the previous years, and certainly with the better profitability in coming quarters and the year ahead, as far as they are concerned.
Right, okay, that's the take on pharma. Let's also get in some BTST ideas going on that note. Kunal, what's on your list?
Two buy calls. The first one is by Indian Hotels after this breakout move above 675, 680 mark. Would look out for targets in the range of 720. Stop loss could be kept at 680. And from the FMCG pack, Tata Consumers is something which is making a comeback. The stock is completing a bullish flag formation, so would suggest a buy 1275 as a target. Stop loss at 1175.
Okay, and Naresh, what's your BTST list like?
So first is a buy on RBL Bank, which is bouncing back from the support band of 210 to 15. Stop loss at 212, target price of 220. Second is a buy on Jubilant Foodworks. The stock has given a breakout into new 52-week highs. Stop loss at 660, target price of 680.
Those are some of the top recommendations coming in. Devin, I want to pick your brains regarding how the Capex cycle is turning out to be. But before that, here are the slides of the conversation we had with Mr. Vinayak Chatterjee earlier. He was of the view that there is definitely Capex which is picking up, but interestingly, it's happening in the non-traditional sectors like semiconductors, solar, green energy, healthcare, data center, etc., and not the usuals like cement, steel, etc.
Thermal, renewable, transmission, distribution with smart meters, pump storage, airports, Jewar, Navi Mumbai. These are all happening sectors. In social infra, if you see healthcare, real estate, and now the announcement of new industrial cities. If you see some marquee announcements, there have been the announcements on chips, on mobile manufacture, on batteries with Ambani's, on digital. There is a boom in data centers. And as I said, there's massive investments happening, announced on chips, mobiles, electronics, batteries, etc. So it is happening. Now the question is it happening with the levels that government expects? No, it is still the state that is doing the heavy lifting in infrastructure. And there is an added expectation that private sector will rise with even more investments in the manufacturing sector. But as I said, there is a fairly robust investment pipeline happening. And let me also tell you that there is a imminent pipeline. And what I call the imminent pipeline is very mega investments in ports.
Okay, that's the take coming in on Capex right now. But Devi, just wanted your own sense on the Capex theme. A long haul story it may be, but you think that the best could be right now perhaps behind us when it comes to, Capex? Because it's a well-discovered story and the stocks as well have seen a fair amount of run-up.
Maybe I would like to think after looking at the various programs which the Reliance is conducting, Tatas are conducting, or the Adanis are conducting on the building of the infrastructure side. In Adani's case, I think is a whole bouquet of infrastructure starting from airports to roads to railways to ports, power and transmission included, along with the renewable segment, and I think the entire value chain of renewable segment. And so is the case with the Reliance, wherein I think they're covering the entire renewable space, I think, as a value chain. I believe that I think this particular Capex program is only a beginning of the era which we are right now talking about. Maybe in the first few years, I think you are going to be seeing a lumpy investment. And in subsequent period of time, I think you're likely to see the ancillary investment taking place going forward. So certainly the Capex program is going to be robust, and that's what is more exciting, because when this kind of Capex program is undertaken for the newer age sector that we are talking about, along with this Capex program, also requirement is of the conventional commodities, in particular the metal commodities or the cement commodities for that matter, or even I think the required segment of the optic fiber or the power cables. They all would come into demand going forward as well. So yes, on one side, you are seeing the new age investment taking place. On the other side, I think the industry is supporting the new age investment, I think, with a higher amount of supply to some of the infrastructure play that we are talking about. One remains confident about the possibilities going forward, and it also gives you the clarity that in next few years we are likely to see the sustained growth of around 15 to 20% in the earnings of the companies at the same time. So that's where probably I think one can keep an eye on some of the larger companies with the bigger capacities that they have. They would be in a better position to reap the benefit out of this the expansion program which is happening in the economy.
Point taken. So that's the view on some of these Capex players. Before we wrap up for the day, just taking stock of the big large caps and how they are faring in the trading session today. NBFC is clearly on the back foot, and insurance too. Devin, do you believe it's that insurance have perhaps now peaked out or at least going out of flavor now? And for NBFCs, ideally a rate cut scenario is a positive time. What then explains the downtick on some of these names?
I think it's a brilliant opportunity to buy in the market because frankly, this market is giving you this opportunity at a valuation which is not so expensive. On one side, there is a possibility of bringing down the rate of interest. On the other side, there is an uptick in the demand for credits, be it retail credit, be it corporate credit through SME, MSME as well. So from a perspective of looking at the banking space and the retail NBFC space as a whole, I believe that I think the larger the size, better would be the opportunity for many of these companies. And that's where I think you're getting the opportunity to invest into them. Many of these companies are currently quoting at 2.5 times or even below 2 times in some cases like SBI, as far as their price to book value is concerned. And that's where probably I think you get an opportunity to buy into. Insurance in particular, life insurance segment, I believe that the companies who have already spent 15, 20 years in the business, they are probably in much better position now to attract the newer premium, the new business premium, and at the same time, I think manage their costs well because of the larger amount of infrastructure already in place. So I would think that insurance per se would find more inclusion in the portfolio of most of the fund managers because I think that's an underweight up till now. So certainly, I think there is going to be a catch-up game going on to increase the weight in the portfolio from the insurance space. So we remain otherwise very positive about the entire prospects going forward for insurance companies. And fortunately, the valuation-wise, they have moderated, they have not increased. So at the same time, it is an opportunity.
Place NBFC's correction is a buying opportunity and insurance is a long-term theme. But Devin, have you looked at the Bajaj Housing IPO and what would be your recommendation? Subscribe or avoid?
No, it should be subscribed clearly because I think it's a pure focus housing finance company with multiple legs across the value chain within the housing space, be it affordable housing, be it prime housing, be it loan against property, or be it developers finance, or even the rental discounting. I think this company has a complete portfolio in place. And what I like most about them is that I think having created complete portfolio, they are ensuring that they can keep on growing the books at the rate of 30% rate of CAGR growth. So that means every 2.5 years, 3 years, I think you're doubling the size of the balance sheet, which is fundamentally very positive. So if one is planning for next 5 to 10 years of investment into such kind of businesses, one is expected to get significantly large amount of capital growth in the portfolio. Clearly, it's a buy opportunity from investment perspective.
Okay, Devin, great to have you on the show. Kunal, Naresh, we'll let you go on that note as well. And I'll hand it over to Snehi for the closing trades.
Well, absolutely. Let's take a look at how the markets have ended today's trading session. You have Nifty 50 with an uptick of 0.5%. Very stellar recovery coming in on this index because we've closed in the green after 3 consecutive losing sessions coming in. So very good move coming in on Nifty 50. Sensex also in tandem. In fact, exactly where the Nifty 50 is, almost a 0.5% uptick on that front as well. Let's take a look at what the broader markets have done because finally broader markets have started to participate in this rally. Both your mid-cap and small-cap Nifty mid-cap and small-cap indices closed with an uptick of more than 1%. So very good support coming in from the broader markets today. That is what the market breadth looked like in today's trading session. After a lot of trading sessions today, finally the advanced decline ratios comfortably in the favor of the advances today. So that is something that has worked out very well for our markets today. Let's also talk about some big buzzers and newsmakers in today's trading session. First up, remember from the GST meet announcement today, you had the impact showing on all the stocks today. The entire snacking basket was in focus because GST has been reduced from 18% to 12%. So let's pull up a Pratap Snacks and Gopal Snacks also and take a look at what that stock is doing. You also had the entire pharma basket in focus because the GST on cancer drugs has been reduced. You had life insurance players that were in focus because the announcement has been deferred, and also on the back of a brokerage note. So certain life insurance players, the likes of HDFC Life and the others, SBI Life, they did not do very well at all in today's trading session. However, on the gainers side, then also from the Pharma pack today, you had the US House passing the biosecure bill against some Chinese firms. So that has worked out pretty smartly for our pharma companies as well, the likes of Divi's Labs, Syngene, Laurus Labs. Piramal Pharma, in fact, closed with the gains of 8%. So very stellar moves on that front. Big buzzers then today, Century Textiles has acquired a land parcel in Worli. So that stock did well. ITI has bagged a 300 crore rupee order from the Bihar authorities. Tata Power has started production at its Tamil Nadu unit for solar cells. Zaggle has also tied up with HDFC Ergo, Sona BLW on the back of their QIP, the funds that they've raised, 2,400 crores. Also on the back of some brokerage action coming in, you had the entire Motilal Oswal coverage on the IT sector. Rather bullish note coming in where they have hiked the target prices for most of the stocks in that bucket. So Nifty IT did very well. Coforge was one of the real winners today, up almost 5% in today's trade. Goldman Sachs on Marico, also rather positive note coming in. You had Morgan Stanley on Suzlon, CLSA on ICICI Bank, Citi on Infosys, as well as Morgan Stanley on life insurance. That is one basket that did not do well today. But largely, well, yes, that's how we are ending the trading session today. Let's pull up Nifty 50 again. There you have it. 0.5% gain coming in comfortably above that 25,000 mark. Once again is where the Nifty 50 is.